It's a holiday shortened week since on Wednesday the markets will be shut on account of Maharashtra Day, but we have lots of global and domestic news to track. US Federal Reserve will come out with its policy decision on Thursday. We have auto sales numbers for the month of April on May 1. PMI data will come out on May 2, and a bunch of earnings from large caps including Adani Power, Ports, Enterprises, Coal India, Britannia, Titan, to name a few. So what will you be focusing on in this event heavy week?
Well, definitely earnings, because that is where I get conviction in terms of uh, improvement and corporate India's meter in terms of performance. Uh, Bond yield in US and Fed meet and all that is something that I don't give much relevance or weightage to. I believe it's a passing shower for me. Uh, Election second phase done and dusted. We'll have the third phase possibly next week or the week after. And of course, the de-escalation in terms of the situation in Middle East and a slight bit of cool off in crude oil prices. But weightage I will give to earnings. Whatever we've seen up till now, Suyash, I don't think we need to complain. That's the positive part. And the wishful thinking is that the rest of the corporates which will announce their Q4 earnings last financial year should possibly be in line. But my worry is that I am witnessing a little bit of fatigue in the market as far as the screen is concerned, Suyash. And historically, month of May has been notorious in terms of upside getting capped. And unfortunately or fortunately, we are trading at near all-time highs. We are approaching the month of May, and we also have the earnings and the elections undergoing. It's going to be quite tricky, not only this week, since it is truncated, like you mentioned, but for the entire month of May, I think we could be a little bit choppy and volatile.
All right, the focus will be on earnings, and speaking on earnings, Gaurang, so far the market seems to be rewarding strong commentary despite some bit of weakness in performance, as was indicated in the case of Tech Mahindra. However, companies that make even slightly negative commentary on guidance front are getting hammered regardless of their market capitalization. Bajaj Finance turned out to be a case in point on Friday. I mean, at a time like this, how can investors who are betting on a company for the long term avoid such short term corrections? Do you recommend they hedge their position, because that can be difficult for retail investors, right, considering the costs associated with it and the complexities? Or should they perhaps book their profits and come back when the outlook has improved, or do nothing and sit on the sidelines, sir?
So, there is a good old saying in Hindi. There are benefits when you change yourself into Gandhiji's Teen Bandar. Hear no evil, say no evil, speak no evil. So you need to be uh, deaf, you need to be blind, and you need to be without any speech. Short term jerks in the market on earnings front or any specific news flow, whether positive or negative, will give the kind of reaction on that particular counter, depending upon which way the news flow is. But since you mentioned a specific name, Bajaj Finance, let me say this. We have a positive coverage over there. 8,600 is the target, which is quite healthy from the current levels where Bajaj Finance is trading at. And even for otherwise, for earnings that we have not witnessed, Suyash, let me say this, that if the momentum is good, if the future is bright, if the management commentary in terms of taking their business to the next level and improving the earnings is concerned, I don't think you need to give too much of attention to the short term unnecessary noises that are there on the street. You need to have confidence in your investment, and you need to keep yourself updated in terms of the future growth.
All right, and keeping it with earnings, we have a big one today. India's largest cement maker, UltraTech, will report its numbers today. And Amit, I'll come to you first. It looks like the street is expecting a good quarter from them. The stock is up 1.5% this morning.
A good quarter from them. The stock is up 1.5% this morning. But the cement sector has been a slow starter this last quarter. There's been a harsh winter in the north. There have been festivities in the south. The east has been struggling with fiscal challenges. But cement prices were under pressure in the quarter gone by. There were rollback in prices that had been increased in the months of September, October of 2023. Coming to UltraTech Cement, analysts and the market expect a revenue growth of over 10%, net profits up, expected to grow by over 20%. Gaurang, good morning, Gaurang. I'll come to you now. UltraTech Cement, while it has the maximum market capitalization in the cement sector, it is, as far as the yearly earnings go, it is behind Ambuja, JK and ACC. One, what do you make of the cement sector? Is it expected to rally post-elections with infrastructure projects and everything? And UltraTech Cement, where do you see it going from here?
Morning to you as well, Amit. So we have almost about more than half a dozen coverage in the cement universe, starting with large cap and mid cap both. Your question on the last, whether the cement consumption will go on fallback of post-election government getting formed, I think it's going to pick up quite smartly. And not only government spending, Amit, I think real estate sector is the second largest consumer of cement, whatever is produced in India. Along with that, you have the private capex. Along with that, topmost priority, of course, you have government spending in terms of Bharat Nirman or infrastructure creation. Cement bag prices are likely to move up north slowly and steadily. Coming out of the third quarter backdrop in terms of harsh winter and not to forget the input cost, I think all that has now become a thing of the past. We have coverage on UltraTech, we have coverage on Ambuja, we have coverage on Grasim. Other than that, we have coverage on Dalmia Bharat, which is under review, big post numbers, but JK Lakshmi Cement, Ramco Cement, Birla Corp, India Cement, these are some of the other names where we have coverage on. And my sense is that if you have to create infrastructure, then you can't do it without two commodities. One is cement, of course, and the other one is ferrous and non-ferrous metals. So you need to keep your eyes on both.
Wanted to get your view on gold, because gold prices, they have fallen by about 4% from their record highs, and they are currently at the weekly low. It seems that no news of escalation of tension between Iran and Israel is being perceived as good news, but still there are plenty of uncertainties. One, the world is still facing two wars. We have escalation. We also have elections here in India, and then in the US later this year. China's economy also seems a little iffy considering the recent economic data that has come out. Considering all these factors, Gaurang, would you still bet on gold, or do you think for now at least the yellow metal has topped out?
You know, when in the last 3-6 months, if gold has rallied anywhere between 16 to 20%, if in 1 week it corrects 2.5 to 3%, I don't think there is enough reason for you to cry and complain. Gold has been a commodity as an asset class which does not entirely ape what the equity market does. I have been, other than equity, Suyash, I think we discussed last time. I've been one precious commodity that I was interested in way back in 2007 along with equities, gold. That's when the price were about 7,000 to 8,000 rupees for 10 grams, which today is beyond 70,000. As a fundamental analyst and as a principle of investment, we have always said that you should diversify your investment. Don't put all your eggs in one basket. Gold, equity market, bank FD, PPF, government debt market, security, mutual fund. These are some 4 or 5 avenues where a common Indian person can invest. Land is a big ticket, so that depends upon an individual's appetite and understanding of the geography. But as a thumb rule, we have said that if you have 100 rupees to invest, then out of that 100 rupees, at least 10 to 20% should be allocated towards gold asset class. That can be in form of gold sovereign bonds, gold ETFs, or physical gold, whichever you have liking towards. But at least have that. The fact of the matter, other than the points that you pointed out, Suyash, what we are missing out is that gold is a natural commodity. And the natural reserves across the globe are dilapidating or going down at an alarming rate because of the indiscriminate mining of gold and the demand for gold. Other than that, central banks have been buying left, right, and center because they have printed currencies left, right, and center. Hedge funds had actually got into gold, and that's primarily the reason why over the last month and a half, you saw the rally that we've witnessed. And those funds have now started to book profits, and that's the reason you've seen 2.5-3% correction. Don't look at short term, medium term, look at long term. And like I said, as a principle of investment, you should have diversified asset classes.
Good morning, Gaurang. Now, another thing that has happened this week is that the yen, for the first time since 1990, has slipped past 160 to a dollar, 160.17. And what has raised eyebrows is that the Japanese authorities do not appear to be stepping in to stem the fall. Strengthening dollar or just a weakening yen, and what are the repercussions you see for India and Indian trade?
I don't see any, Amit. This can be a short to medium term concern. I mean, who would have imagined that from negative interest rates, Japan would turn into, status quo, minor positive interest rates. So it's a question of short term, medium term. Flows are going to come to India, come what may. Tell me one geography in the emerging market map where you have the kind of run rate where India has rising GDP, lower interest rates, possibly, and of course, inflation coming down, corporate India's earnings improving, retail participation improving with conviction from a long term point of view. And along with that, you have a steady government possibly in place post 4th of June. So, this can have a short term to medium term impact. I will not read too much into it.